Internet? I am so excited. This is the show we've been waiting the whole month of February for. I have the most amazing trading battle for you today. It's retail versus institutional. It's two master traders and their best showing off their art today. I cannot wait to get you started. Today we have a super special trading battle with Brent Donnelly on one side, Blake Morrow on the other side. You probably know both of them. Brent, of course, is the author of Alpha Trader, and Blake is, of course, the founder of Forex Analytics. Both guys are amazing professional traders. I'm very excited, very honored to have them on the show today. Hi, guys. How's everybody doing?
Hey, Boris.
Hey, Blake.
Hey, Boris.
Hey, Brent.
How are you doing?
Hey, how you doing, Blake?
Good, man. Good. I'm ready to go.
All right.
Yeah.
Before we start, I got perfect news for everybody who's watching me right now. If you want to trade with free money, absolutely no risk to your account, go retweet one of the Trading Battles tweets. And if you win the contest, they're going to fund you with a $500 account right into your account. So easy, probably the best trade you can make today. Go retweet the thing. And also subscribe to the channel. Follow us everywhere. Tell all your friends. This is the best trading content on the internet because I have the best professional traders in the world today with me. So super excited to get you guys started. I don't even know where to start. We have been anticipating this show for so long. You guys come from a little bit of different backgrounds, and I think it's really worthwhile to maybe start with Brent because maybe a lot of the people who are watching us aren't quite as familiar with Brent. Brent, of course, has been I think across the whole FinTwit universe. He's been on a lot of podcasts. He's also the author of the Alpha Trader, but he comes from an institutional background, and maybe you could just give us a little bit of a bio about yourself and how you came to become a trader.
Sure. So I grew up in the Liar's Poker, Wall Street, Gordon Gekko era. And the funniest thing is that the three things that influenced me were Liar's Poker, Wall Street, the movie, and Reminiscences of a Stock Operator. And little did I know, all three of them are cautionary tales. But anyways, now I've been in the industry for 25 years. So what has always attracted me is kind of like the puzzle solving and the math side of it, and just like the sort of excitement and fun part. I mean, that's what Liar's Poker captures, right? It's just the culture and the fun.
Exactly.
So I came straight out of school and started trading FX at Citibank, and that was my first job. And then but I've always had this sort of battle in my head between being a writer and being a trader. So I actually quit in 1998, went back to Canada, did some writing, had a show on TV, a cartoon that was on TV in Canada for a while. And then I started trading my own money during the NASDAQ bubble. And then I did a lot of things right for a few years, and then I did a lot of things wrong. And then my TV show got canceled. And then when decimalization came to the NASDAQ, that crushed my trading style. And I was I was slow to adapt. So like a lot of the lessons that I learned was from, I traded my own account for 5 years and basically went from like 25 grand to 400 grand to like barely anything.
25 grand.
But this is over 5 years. So I spent all my money. I had like an M3 and all this stuff. Like, I did very well, but then I made a lot of mistakes and I didn't recognize that the regime had changed. So then I was getting married at that time and stuff. So I just decided, okay, I gotta go back into like get a real job. So then I went back to work at a bank, and I worked at like a few different banks. I was an MD at Nomura, then Citi, HSBC, and I also worked at a hedge fund for a few years. So I kind of have like the small like retail background for 5 years, and hedge fund, which is obviously like massive amounts of capital, for 3 years. And then I worked at a bank for most of for 17 other years in between. And usually bank risk taking is like a little bit less than a hedge fund, although it depends, what kind of PM you are in a hedge fund. And I mean, I really never stopped loving it. And the good thing is, and actually part of the reason I didn't end up staying at the hedge fund was what I realized for me, what makes me really happy is trading and writing. And a lot of what I write is about trading, but it's also about global macro, because that's kind of my specialty. So I've found a way to both be a trader, but then also be a writer. And I think that has been important to me being happy, because, you know, I'm a big believer in the understanding at what point your money versus happiness curve flattens out. And like, I have a good idea of where mine flattens out, and pursuing the next millions after you reach the flat part of the curve isn't always the right answer. You also have to, you know, be pursuing things that you're passionate about. So now I'm doing a lot of writing, like some educational writing and stuff like that, just because it's fun.
Do you find that writing helps you crystallize your trading ideas, or it's a totally separate?
Yeah, huge. No, that's huge. So that was actually one thing that I found. So when I worked at the hedge fund, I wasn't allowed to publish anything because of compliance and all that. So generally what I do is, so I write this thing called AMFX. So I'm sure some people have seen it on here.
I'm a fan. I read it every day.
So
does Blake, I'm sure. Right.
When I write that, generally that kind of anchors me for at the start of the day on like, okay, here's roughly what my plan is. Whereas sometimes, so when I was at the hedge fund, it was during the Eurozone crisis, and it was very easy to just come in, sit down, and you see a headline, Spain downgraded, and you just start pressing buttons, and like you kind of trade with no plan. And so I write about this in Alpha Trader quite a bit because I'm a big believer in it. So if you look into like the science of thinking and memory and how brains work and all that kind of stuff, essentially your brain treats something that you write down differently than it treats a thought. Like something that you write down, you're signaling to your brain, this is important, and it gets coded, like it's sort of like hard coded. Whereas, you know, you have so many modules in your head that are all saying different things, and half of them are contradictory, and some of them are helping you and some of them are hurting you and stuff. So I feel like by writing, you distill like the logical brain. Like I always say, like for me, I have like the dumb brain and the smart brain, and I'm trying to make sure that the dumb brain's not in control a lot of the time. So by writing stuff down, you can see. So actually, sometimes when I write my piece, I'll get halfway through it, and I'm writing, you know, bearish Aussie because of this, this, and this. And then like a big part of my process is always thinking about what's the alternative hypothesis. So sometimes like I start laying out the alternative hypothesis and I'm like, geez, like I got, you know, 5 bullets in my favor and 4 against. This actually is not the idea that I thought it was. And then I'll just exit and start over. So I felt like the times when I was trading that I wasn't writing, which was like 3 years, my process wasn't as good. Like it just, you know, because I mean, I was already whatever 35 when I was doing it. So it wasn't like I was new at trading when I went to the hedge fund, but I started making a lot of mistakes when I stopped writing. I started making a lot of mistakes that I was making when I was like 26. So I'm a huge believer in it. Not necessarily just journaling, but also like writing your thoughts down ahead of time, not just journaling after.
And Brent, can I just add that it's like it reinforced. I have a very similar situation in my career where, you know, I've been broadcasting the Morning Edge for literally almost 20 years, and it's the years that, or I say years, it was the periods of time that I didn't do that reinforcement when I'm trading. You know, kind of you know, laying out a plan, having a message, and saying this is the way that I'm going to be trading the markets today. When you don't have that, it really throws your, as you point out, your process off, and it has for me over the years as well.
And I think there's an aspect. Oh, sorry. Go ahead, Boris.
No, I was going to ask you, Blake, about that because your process is different, but very similar in a sense. In the same way, as you said, every single day you're broadcasting. That means you have to have a content plan, which by its very definition needs to be a trading plan. Now, it sounds like you agree with Brent that
100%.
Having an idea ahead of the day, what I'm going to do, where my risk is, and how I'm going to proceed, you know, because I think where most traders kind of fail is they try a trade and then they never ask, well, what happens next? They're not thinking 2 or 3 steps ahead, you know, and it's only when you think 2 or 3 steps ahead that you're not surprised. Like I think the single biggest problem in trading, or single biggest problem in life always, is unexpected surprise. We hate unexpected surprises, human beings, right? And the market is always full of unexpected surprises. And if you don't have that scenario in your head, that experience of like, well, I've seen this before. I've seen how this market, I've seen the unexpected surprises. This is typically what happens. This is how I'm going to react. That's effectively, I think, 90% of what people mean by experience. It's just simply experiencing lots of unexpected surprises, which kind of repeat themselves constantly in the marketplace, and not being frozen by them, not knowing what to do rather than not knowing what to do, which I think is.
Brent, can I ask Brent a question? Is when you do your analysis like on a daily basis, and I know for myself, I'm always doing if then if this then that. So if this happens, I'm going to react by doing this, and I'm going to do this. This is going to be my action if this happens, or if this currency pair reaches this level, I'm going to look to trade this asset in a certain direction. Do you do a lot of that type of analysis? Because that's what I find myself doing all the time, all day long.
I do that a lot with events, definitely. Like all this stuff that we're talking about, I think a lot of it comes down to just doing the work, right? Like coming into trade and just sitting down and pressing buttons is never going to work, because even if it works that day, you don't know why it worked because there was no process involved. So a lot of this just comes down to preparation and doing the work. And so like on my side, that also means like reading central bank speeches and like boring stuff like that. But yeah, I think like, I guess in some ways what you're talking about, Blake, is like reassessment triggers or catalyst triggers. I don't trade as much with charts as a lot of people, but I use them a lot, but primarily for risk management, not for trade selection. So I will quite often, like I'll have some kind of thesis around like the way the narratives are changing in the world or whatever. And that makes me want to be short dollar yen. And then I'll drill down on the tactics. And then like you're suggesting, I'll say like, this is a pretty crappy level to get into dollar yen. But if it rallies to, and I'm just saying this, this isn't my actual view, but I'm just saying this could be a view. But if it goes to 115.20, that seems like then I can lever up. And that's where I want to get in, because like there's always this tension between having a really wide stop and then obviously you're less likely to get stopped out, or having like a razor thin stop and you can have them at the biggest position, because the further your stop is away, obviously the smaller your position has to be for the same amount of dollars at risk. So for someone like me, who I always like want more risk, I'm always trying to thread the needle and like have the perfect entry point so that I can have maximum leverage. But I also know, it's better to go a little bit away from that. Like you find what you think is your point of maximum leverage, and then just be like a little bit safer and, move your stop another 15 pips further than you wanted it to be, just to
Can I ask both of you guys, hold on, I want to hold on this point. This is really important, but I ask both of you guys two different questions. To you, Blake, you have a level, right? Let's say you're long something, you have a level, and you say, if it breaks this on the stop, that's when I want to be out. Do you ever say to yourself, oh, this is the exact opposite of my original thesis, it's actually breaking the stop, I want to go the other way? Do you ever change your view midday and just literally join the other side on the trade?
If there, you know what, that's a good question, and I would say more times than not, I don't. And unless there's a reason for it, like there has to be a catalyst. Like if you could use Russia, Ukraine right now, perfect catalyst. Well, there's a de-escalation, and then all the ideas that you had and that you were applying towards, an escalation in Russia, Ukraine, everything has to flip. And then you say, well, if the dollar yen breaks 114.50, I'm just using that as a number, then I have to be on the short side because the yen's going to strengthen because, things have escalated. But, flip side of that is, things have changed. And Brent, you would know better than anybody that, you're always watching the wires, especially during, times like these where headlines do matter. And a lot of times headlines don't matter as much. But right now in this market today, it does matter.
Yeah, exactly. Now, to you, Brent, I actually have a question. You said you thread the needle. You want to have as tight a stop as possible so you can have maximum risk. But this again is a question of will you come back? So let's say you long dollar yen, 10-point stop, you get stopped out, right? You wait half an hour, trade still looks good to you, will you go back in? Will you try more than once on your trade?
So that's a great question. So just to be 100% clear, I'm saying like it's a spectrum, right? Like I'm not saying that you always want to go short with a 3-pip stop. What I'm just saying is you want the tightest stop possible within the realm of understanding what the noise to signal ratio is in the market and what volatility is and all that. But to answer your question, I actually do that quite often.
Right.
And the reason is that generally, like I'm more of like a buy low, sell high guy in general. Like what my edge is a lot of times is finding the points where the narrative's changing, but the position tends to lag. So, like the economic story can be changing pretty dramatically before the markets actually start to turn because people are sticky with like people have confirmation bias and views are sticky. So like let's just say, so if you in that case, like let's just say I was bullish stocks, which I'm not, but whatever. So then and I say like, okay, I feel like we've kind of priced it. I'm just throwing out a hypothetical here. We kind of priced in a lot of Fed hiking, Russia, people are waiting for Russia to attack any day. So there's mostly an upside kicker from that. Then I might then start drilling down on the charts, and then I find like, okay, I can go long here in SPOOs with a 40 handle stop. That looks pretty good. Like that's about what kind of leverage I want. And then I get stopped out, and then 2 days later that I might feel similar about it, and then I'll take another shot. So like sometimes what I'll do is like I'll take 2 shots where I'm risking 20 to make 80 or something like that.
Right.
And I end up, getting it on the second shot. I don't mind doing that. However, I will say the times that I've traded the worst in my life are when I'm really committed to a view. Like I'm a big believer, and I've learned this the hard way, in like strong views weakly held. So one thing that I used to do as a trader at a bank, you go to see a lot of clients. So we used to go to all the hedge funds, and usually you're not meeting like the CIO or the founder. You're meeting like, the senior PMs or the execution people. And so I would always ask them like, so who, the guy who's the famous guy who is like the god of trading or whatever. I'd always ask the PM or the execution guy, why is that guy successful, do you think? Or like what's like unique about him? And I'm saying him because all these founders are men. So, and the answer almost every single time was, in the morning meeting, we have everyone talks and he gives his big bullish case and all that. And then at the end of the day, I look and he's short 5,000 futures. So I think the ability to be flexible. Now, obviously that can be like a disaster, right? That can just mean like you're friggin' selling every time it breaks down. Like I think they're, like Blake said, you have to have reasons. And my process always involves like, okay, what are the bullets? Here are my 5 reasons. And so if I can do that with a straight face and be honest to myself and say, this trade makes sense, I'm going to take another shot.
Yeah. Blake, do you do that as well? Do you have like bullet points for your ideas, even if they're mental, then it's not necessarily written?
Yeah, that's a great question, and the process that we go through, like with our clients every day, is we actually go through every major instrument that we cover, and we go through what are the key levels and why would we get there, and if we get there, is it a place that you really want to reverse? Because the average trader tendency is to fade strength or fade weakness, and so the question I always have to ask everybody every single day is, if the euro got up to like let's say the euro got up to 114, which is resistance today, we get up there and nothing's changed. Do you really want to be buying there? Or if it breaks out above it, is there a reason why we are buying euro now above 114 when it was just trading at 113.50, earlier in the day? So we talk through those situations, and listening to Brent, it actually makes sense where I should actually be writing it down versus typing it down. It probably makes a big difference up here, right?
I think so, yeah.
Yeah.
Interesting.
One thing, I'm going to just throw in one more. I had said earlier that like I tend to be like a buy low, sell high guy. But I think one thing actually that's important is to not really be the same thing all the time. Like breakout traders do great when volatility is high, and mean reversion traders tend to benefit when vol's not as high. But what you should really be doing is not be a certain type of trader that only does one thing. You should do the thing that works in the market in the regime that you're in, you know? So I mean, like when the shit's hitting the fan, oops, I don't know if I can say that, but when when the guano's hitting the fan, you know, then I'm a breakout trader, and you know, when the narrative's turning, then I'm a buy low, sell high guy. So I just wanted to mention that because I think it's important. And actually, that's part of like the adaptation thing is not just adapting your own trading style and getting better as a trader, but also adapting to the volatility regime or the type of market that it is.
You know, Brent, you and I have talked obviously on a personal basis many times, and I consider you a friend because we've worked together at different interviews and whatnot. But it's interesting because we followed very similar paths early on, and we were both products of, you know, the NASDAQ bubble. Just kidding. But we were both products of that. And one of the things that you know, you go through when you go through this 20, 25, 30-year process of trading the markets is, and one of the things that I'm always trying to sharpen, and you know, people go, well, you know, but you've been doing this for over 20 years, so why haven't you figured this part of it out? It's like I always thrive to be better as far as being more flexible, because as a trader you tend to get set in your ways because of, and it usually comes down to profitability, right? And right. So your P&L is working a certain way, you're trading a certain way, and then it's when the market shifts, it's sometimes that adaptation period from shifting gears. I'm not as good as a lot of people are, and I've always strived to be better at that. So,
you know, I think it's partly too the rat hitting the button to get the cocaine or whatever. That you know, that whole like stimulus response thing is like, if you made a lot of money short Aussie yen in 2008, you're always kind of wishing that Aussie yen would trade like that again, but it's not going to. Like, that's not happening.
Sure.
So like,
you mean Aussie yen is not going to go down 18 handles in a day like it did in 2008?
Those were good days, by the way.
People that like, whatever your glory days were of trading, people tend to want, like, have a subconscious preference for that style. And what you really want to do is like once every month or so go, okay, like what style is rewarding or is getting paid right now, and like what makes sense, and not just be like jack of one trade.
Absolutely. By the way, I totally gave away the fact that like I've been trading stock index futures for too long, because I just said, you know, Aussie yen went down handles instead of big figures. Just like I haven't touched FX in so long that it's that I'm rusty. So we can talk forever, and we will. But I want to put the first challenge to both of you guys, because we have, you know, the first challenge of the day is actually kind of my little evil challenge, which is that your opponent is going to choose the trade for you, and you are going to manage risk. So I'm going to let Blake choose the trade for Brent, and then we're going to go to Brent and see what he wants to do with Blake. So what do you want to do? Yes, you can show it.
All right. Well, you know, Brent. So if you haven't been following the situation in the Marianas Trenches, you know, the way this sea is really shifting the way we're getting movements out there. I really want you to follow the Thai baht ruble chart. And I'm just kidding. No, because
I swear to God, I thought you were serious. I was like, you can't.
I was just going to close
trying to pull it off, and it would have been great if the chart would have pulled up at the same time. No, I actually wanted to bring up the U.S. dollar ruble just because of current events, and you know, and this is because it was actually a question that was posed to me. And I'm like, I'm just not following the ruble as closely as a lot of people are. And I'm assuming you've been keeping an eye on it. But, you know, we're actually winding up pretty tight here. But based on the current events, the dollar ruble, how would you trade it right now? How would you actually approach the dollar ruble at this moment, given the current situation that we're dealing with?
Well, yeah, that's an interesting question, because actually things have really ground to a halt in the last few days in the FX market. And you know, everything was flying for a bit on the ECB normalization and all that. And now people are kind of paralyzed by this ruble risk. The funny thing is, or by the Russia risk, sorry. The funny thing with the ruble is that it hasn't really priced all that much in. Like if you look at what happened in 2014, there was a couple other things going on in 2014, like eventually oil collapsed, obviously, but it's kind of like geopolitical risk is weird because it's like the way I look at it is I generally you want to ignore it because it's like earthquakes don't usually destroy cities. Like, you know, you don't assume every time there's an earthquake that cities are a city's going to be destroyed. But obviously once in a while that does happen and it's a big deal. But like if I think about all the geopolitical events in my trading life, very few of them were meaningful in terms of like where the market actually went, other than the headline risk. So the issue with ruble and the reason like it becomes very difficult to trade, for example, like options, is that people don't want to sell options because embedded, if you sell an option, is some kind of hedging strategy, and you can't really estimate like what your gap risk is. So the worst thing in FX position wise is weekend news that is the wrong way for you. And I've had some like horrible ones. Like there was one where Erdogan was speaking and like dollar Turkey opened up 8%. There was the one where US got downgraded at 6:30 p.m. on Friday, and I was long dollar Swiss. So my
Wait, that was
philosophy.
the U.S. downgrade didn't really have much of an impact on the dollar, right? I mean,
Well,
what
no,
did
but
that?
it opened like 2% lower, and I was long like
Uh,
$110 Swiss or something.
uh,
But then actually what happened was I got lucky because very few people remember this, but I remember it very well because I was like in mild shock. So there was basically they said that if it doesn't come out by the close, then it's probably not happening. That's what somebody had said. So no, it was kind of unexpected. And then the G7 issued a statement saying we stand by the world reserve status of the dollar or something like that. And then
right,
actually, if
right.
you look on a chart, that was the low in dollar Swiss. Like it's never traded there again.
Uh,
So, anyways, my point was because of the like it's just really annoying to have that weekend risk, but also there's like a serious financial like potential risk of ruin as
right.
well. So that's
Super
the
interesting.
biggest issue with ruble right now is that if they go in on Saturday and you're short dollar ruble, you're kind of dead, or you can't quantify your risk. And the beauty of FX trading FX, and that's the reason, like part of the reason that like hedge funds like having a pot of FX traders is that it's just like the most liquid global macro thing in the world. So so I don't like trading things that have gap risk because I just feel like my whole thing is like I know exactly like, yeah, I'm risking 50 grand on this trade or whatever. I know exactly what I'm risking, and if I'm wrong, fine, I'm out. I lost my money and I move on. So
So the answer from you is if you stuck you short dollar ruble, you would you may hold it for a little bit, but come Friday you just blow out of the position. You just
I
withdraw
would
it.
square it up before Friday. Yeah. I mean, I'll have positions over the weekend, and they're obviously like you're bearing some kind of risk there, like
Right,
with something like Aussie or whatever, anything can
right.
happen. But with ruble, it's just like it's a
Great advice.
stupid gap risk that
No,
there's no point. You don't want to
it's
sell that.
absolutely it's brilliant.
My
It's
take.
brilliant. It's great advice, and I think people don't quite appreciate it. That it's not just the geopolitical risk; it's the gap risk that's really the problem.
Right,
Now,
right.
what are you going to stick Blake with? What are you going to give him to manage?
So I'm gonna give Blake long Ethereum. I've been bearish crypto for a while, like since November. I write about it in my Substack. It's free if people want to sign up. But there was kind of like this nice period of stability in crypto, and I think the overconfidence kind of came back again. And now I think we can get like a big wipeout to new lows. I'm like bullish crypto structurally, but we're in a really bad part of the cycle. So like I'm bearish, cyclically bearish since November because of where we are in the cycle. Like the Bitcoin halving cycle and the Fed tightening, global central bank tightening cycles are both very negative for crypto. Because I just view crypto as essentially like a levered risky asset. I know there's a lot of nuance between like the L1s and L2s and all that stuff, but if you bring up like CoinGecko or whatever on some random moment and scan like the top 20, if the one's down 11.8%, the other one will be down 11.2%. Like they're generally the whole ecosystem is very correlated.
Yeah.
And I feel like we're also kind of coming out of like a bit of a Web3 bubble. So I'm happy to drop some Ethereum in Blake's lap and he can do what he wants with it.
Well, you know what?
Baby.
I'm glad you did. I actually know how to trade it perfectly based on getting that crap dropped in my lap. So, so Ethereum, in my opinion, actually is in a fairly bullish setup. But I agree with what you're saying as far as where cryptos are at, and so as far as the bullish setup goes, it's basically do or die time for Ethereum right now. Like if I happen to be long or just got long Ethereum, it's real simple. What you'll notice here is we're setting up a complex inverted head and shoulder pattern. It's complex because you have offset neckline, you have offset shoulder, the head's apparent, and which is actually channel support. So really, for me, it's very simple. As long as we stay above this 50% retracement or that spike high right here that comes in, let's just call it 2,700. As long as you stay above that, the risk is, maybe there's a de-escalation, and you're right. It's a high beta, risk on type of asset. So if you happen to be long Ethereum, or I happen to be dumped Ethereum into my lap by Brent Donnelly, thank you very much. All I'm hoping for right now is that there is some sort of catalyst that drives risk assets and maybe the S&P back to 4,500, maybe even higher, back into the upper end of the range. If that's the case, then Ethereum has a shot of making it up towards 3,200. You break above 3,200, then you do get a move probably back up to 3,800. But I will tell you, I'd be out below 2,700. There's no way that I would be willing to risk anything below this, because I think it is from here. If it drops below 2,700, it is an elevator shaft to this channel support. Below that channel support, and then it gets downright .com bubbly ugly for crypto.
I can't help but think that both of you guys are essentially trading the same trade. Now, there's no dollar ruble on the 8CAP platform, but to me, the implied trade here is basically war, no war, because really Ethereum is trading war, no war at this point. And the hold at 2,700 is going to be if we don't have Russian troops in Ukraine by the weekend. That's, I think.
So you know what the problem is, Boris, though, is that it's not. I don't think it's as binary as you're saying. I think that's what's making it really hard to trade. Is that like he can just stack troops on the border and kind of keep like the sword of Damocles hanging over everybody for a long time. And like I think that's like, I'm not a geopolitical expert, but it seems like when you're trying to assess probabilities and risk manage, it's a really hard one, because you can't just hide under the desk, for all of 2022 if he's just going to try to grind, and grind people down. So
no, correct. But my point is much more on the immediate, like within the next 3 or 4 days. If you're looking at that chart, my guess, just my guess, is if he rushes the troops to the border, and we get the headlines on Bloomberg and everywhere else that they're making the invasion. My guess is that 2,700 gets broken. It may not. It may pop back up, but like Blake's going to be stopped out. Like in the
right.
And the good news is that it does trade over the weekend. Most of your platforms are going to be trading over the weekend. So,
so I can hedge my ruble with Ethereum.
Yeah, there you go.
We're going to trade Ethereum ruble. That's actually, by the way, the one huge advantage of crypto is that it is a 24-hour platform, that it trades, the weekend, and it does offer you. And it's probably what's going to be interesting is if typically, a lot of geopolitical risk happens over the weekend, because that's when they like to have the sneak attack. This is going to be the most reflective asset, because it's the only asset that's going to have liquidity over the weekend, where people are going to go crazy with. So, it could be crazy. Could be really interesting to see how the market trades. I still think he's not going to push it, but you never know. It's touch and go. I thought for sure he wasn't going to go. Now I'm like 50-50, because he may be crazy enough to want to try it. Geopolitically, I think it'll be a disaster in the long run, but in the short run, it's certainly going to create lots of tension. So that's really interesting from every possible angle: markets angle, geopolitical angle, different instruments. I think we kind of deconstructed that pretty well. We are, it's so much interesting stuff going on here, but I got to keep you guys moving a little bit onto the next challenge, and then talk about, I think, the interesting part of the next challenge, because the next challenge that we have is the Forex Book Club Challenge. And of course, Brent is a very well published author. He's got Alpha Trader out there. It's brand new. It's on Amazon. You can get it. I think I don't know how high it reached on the Amazon investment part, but I'm sure it reached pretty high. Very good book. A lot of people are saying very good things about it. But the challenge on this particular second segment is really interesting. Each trader has to place a trade using a preferred methodology from the book they've read. So first, I'm going to go to Brent, and since he's obviously not going to use his book, I'm curious to see what book you chose, what idea you think is valuable in that book, and how you're going to construct a trade out of that.
Sure. So the book that I picked, I actually have it. I keep it in my office. Is Mind Over Markets. So it's a book about market.
Who wrote that, by the way? Sorry, who wrote that? Who's that?
James Dalton. Well, there's three guys, but the two Dalton brothers, and then Eric Jones. So okay. The basic idea is, and I'll bring up a chart here. I do it on Bloomberg, but you can get it on other systems.
Yeah.
So the basic idea is that each time, what it's doing is it's measuring how long price stayed in an area before it went to a new area. So all those letters just mean, like, if there's a lot of letters there, it means that price traded at a lot of different times throughout the day. And if there's very few letters, that means that price did not trade very many times during the day. So like,
can I just interrupt you for a second? What is the time sample? Is it a 1 minute sample? Like, does each letter represent 1 minute?
You can choose, but in my thing, it's 5 minutes. So this is 3 days. Okay. So each stack is a day. So that little tiny stack is today because we're only 2 hours in or whatever.
Right.
And so the general theory, like, I'll try and do it justice in like the 2 minute thing, is essentially that those big, huge areas, those are like where equilibrium is, right? That's where, like, there's a lot of noise. Noise traders are battling, but it's not really going anywhere. And there's probably like medium-term players selling and buying at the extremes, and that's what keeps it in. And then if you get out of that equilibrium, you're in a new value area, and then there's a lot of information in that. So can you see my cursor or no?
Yeah, we see it.
Yeah. So like this area right here, that means like we basically just went whoosh and it barely traded there. So that's 115.60. And so this area here, this is all before retail sales came out. And then retail sales were strong. And then Dalian went, like, sat there for 2 seconds and it went straight down. So that's like two indicators on top of each other. So one was good news, bad price. So we had like a really strong retail sales, control group was strong, and Dalian couldn't go up. And then, so this isn't quite a single print. Like, a single print is when there's only one, but it's the very minimal areas, essentially like a gap, right? So those gaps are basically areas where there was no equilibrium reached. So like disequilibrium zones, and those tend to be really good pivots. So what this shows is that, see, there was this single print here or whatever. It was not quite, but whatever, single print here. And then the high the next day was the same level. So we basically went back up, retested, said like, hey, let's try to get back to the old equilibrium. And whoever were the sellers probably that were up here moved down to here. So generally, I have a very simplistic approach. Like, there's 500-page books about this. My approach is essentially, I look at it and I say, okay, are we in an equilibrium zone, or are we trying to find equilibrium? It's usually pretty easy to tell. And then what is the current equilibrium zone? And then where are the single prints? And I'll use the single prints or the very short areas. Like, even this I'll use, because basically this is telling you that, like, around 1520, like 115, 1015, I guess it is, around 1015 area, there was very little transaction happening, very few transactions happening. It kind of just zipped through there. So I tend to use these. So like, for my trade, I'm going to go short dollar yen. It's not like the dream entry point, because it has moved a decent amount after retail sales, but I actually don't mind that. I feel like there's a lot of information.
So can I just ask you? So in this,
Hit
so
me.
today, this is today, we have just the stub of today because we just started trading today, and we have
Right.
effectively yesterday's chart. And on yesterday's chart, we have this disequilibrium level at around 1520, right? So
Yeah.
in your perfect plan, I mean, obviously you're going to go market now, but if you
Yeah.
were sort of had, if you had all your capabilities right now, would you wait? Like if it rallies to 1520, would you just try to lay out a probative trade there and with maybe, I don't know, 10, 15 pip stop, something like that, and see if it just nicks the area and then falls away? Would that be a structure you?
Yes, I do that. In this case, like I actually like the trade as like a 5-day trade. So my time horizon on the trade tends to influence what my stop is. So if it's like an intraday trade, there'll be times when I'll do exactly what you said. Like I'll risk 15 to make 40 or whatever, and I'm perfectly
So
happy to do
interesting.
that.
Right. Right.
But in this case, I try to generally match like if I'm going to hold something for 5 days, I'm willing to give it a little more room than 10 pips or 15 pips.
Sure. No,
Because like I
sure.
feel like there should be some logic to it. But what I'll do a lot of times also is like in this case, in this trade, I might do a bigger size than I would do otherwise, but put half my stop close and half at like a safer level kind of thing. So like in this case, I go short like whatever. Like let's say I sell 8 contracts on the machine or whatever,
Right.
and then I'll put a stop for 4 above this area here. But then
Right.
like the more sort of correct stop, in my opinion, would be above the breakdown after retail sales.
Right.
So really,
Right.
I want my stop to be at like 115.70 or somewhere up there,
Okay.
because if we got back into that old pre-retail sales equilibrium area up
Yeah.
here, then
Then
like
you're bugged.
being
Then you're
short
bugged.
makes no sense.
Right.
Yeah,
Then the thesis is busted. But up to that point,
correct.
so this is a really, really interesting approach, which I've never heard of before on the show, where typically you always hear the other way. I'm going to take half here on the short exit, and then let milk the other stuff, and try to run, keep the runner on. But I've never heard this idea where you kind of like, okay, I'll give up half, and then I'll stay with the other half to really, really see if I can stay in the trade. Is that one of the reasons why you can do this? Is that because you are generally always trading with a positive risk reward ratio? So in other words, if ultimately you're proven correct, you're going to try and go for maybe, I don't know, 80, 90 pips, and that small loss on the half will be made up. You only have half a position, but that half a position is going to have like a 2-to-1 or 3-to-1 risk reward ratio, and it will essentially make up the losses on the other half.
Yeah, but you got to do the math before, because like what you're implying is correct, that if your stop on the first half is far enough away, your average is going to be so bad that even if you're right, you don't make money. So when I'm doing this, like this thing I'm describing, usually that first stop will be like super tight, like 25 pips away, 20, 25 pips
Got it.
away.
Right.
And then it
Right.
doesn't ruin your average, because otherwise you're right, it just ruins the average, and the whole
Yeah.
trade is just kind of a joke.
Yeah. But then if it goes your way, let's say for 50, 75, you're already net positive on the full position because you've made up the losses, and now you're actually net positive on the equity, and you can
Yeah. And if it goes straight down, you have a lot of leverage. So
right.
it's kind of like the other thing about that too is that one thing I've done more over the years is not always like having the false precision of like this is the exact level where I'm going to be right or wrong.
Right.
So like, if my take profit is 100 points and it moves 70 quickly and then stalls, maybe I'll take back like a small bit of it. Like I'll take a quarter of the position back or whatever. And then also it avoids the thing of getting stopped out like 2 pips from the high, because if you have 2 different stops, or sometimes I'll have 3, but rarely,
Right.
then you're not as beholden to like that one level, that exact level that you picked.
Right. Right.
Um,
You've
and
already
even with
lightened up
take,
on the position. You have
even with
a
take profits, I'll do that. Like I'll like say my objective on this trade is 113.50. I'll usually put like a bid at 71, 61, and 51, just to kind of be like, in the neighborhood, so that if my entire position I'm bidding at 51, first of all, sometimes if it's a bigger position, then it actually can be market stopping, like if you work at a bank. But also because then like if you put your whole thing at 51 and 54 is a low, obviously that kind of sucks. But you're not really giving all that much up by going 71, 61, 51. Like you're giving up a little bit, you're paying a bit of a tax, but you have a better probability of getting filled.
You're not letting the perfect be the enemy of the good.
Yeah, exactly. I'm a big believer of that in life. That's kind of like my philosophy is like go for excellence, not perfection, kind of thing.
Right. That's excellent. Great. All right, Blake, my friend.
Yo.
What are you going to do? What book are you going to use, and what setup are you going to show us today?
Well, first of all, Brent, you just wished that I was going to show your book, but maybe not yet. So I had to break out the Bible. This is the tech.
But everyone's going to give you the Bible. Absolutely.
Everybody should have this Bible. Mine's from 2001. I think it's the 8th edition. I think they're probably.
Do you know when it was written? Let's see how well you know your Bible. I think it was written in the 30s, right? Or 50s or 30s? I think it was the 30s.
I want to say it was 50s. I want to say it was 50s. The first edition. Which these are great books, and you should really, if you're a CMT, you already got one, and if you guys are any type of technician, you should definitely have one. But I will mention Brent's books, because Brent, even though he doesn't fancy himself a technician, if you go to chapter 10, he really talks about a lot of price action and a lot of chart setups, and actually he references the wedge reversal that I'm talking about. That I'm going to talk about right now. And I also have to mention that if you guys haven't read a Mark Douglas book, please, late Mark Douglas, got to read like The Disciplined Traders, the first book I was ever handed in 1997.
That's a good book.
I think that's a triple star recommendation from all three of us who've all read the book, who all understand. There are just fundamental truths in that book that if you understand them, it will make you a much better trader going forward.
Price action to me is everything, and there are so many different facets into trading, but price action and how things respond at certain levels is so important. And so that brings up like the chart that I want to show you guys. And I know a lot of people aren't going to like this trade, because I think a lot of people think that the RBNZ is everybody's priced in too many rate hikes, and there's no way they're
Blake. Yeah, Blake, I got to interrupt. It's an emergency. I want to sell my dollar yen. It just rallied it's almost at the figure. So can you guys sell it?
Jump over to his chart or over to his screen.
Okay. No, you can. He can sell it, or the producers will sell it for him. If you want to show me the screen, that's fine.
I think. But I think it'll be.
We'll have the producers sell it for you, but you can show me the screen. Yeah. Tell me what you're looking at on dollar yen here.
So I want to sell 7.
He's going to sell 7 contracts dollar yen. Is there a red headline there? What's going on here? Oh no, it's nothing bad. Okay.
No.
I was like, what red headline is on?
It looks like markets just open in Asia. You got a lot of opening stuff happening. And Brent, going back to kind of what you were saying about your strategy of what you're doing. One of the traders that works with me, and he's worked with me for years, his name's Paul Franco, or SPZ Trader. Many people.
Oh, I know. Is that Paulie? Oh, I love Paulie.
Paulie lives and breathes exactly what Brent's doing every day, and so I had to throw that out there. Anyway, so
sorry about that.
The reversal that's setting up in the Aussie New Zealand for a lot of different reasons, but this is what we call an ascending wedge, or descending wedge, falling wedge, rising wedge, however you want to look at it. But this is a really big reversal pattern for me when currencies or any instrument really comes out of a wedge. That's signaling a quick reversal. And as most of you know, the initial reversal is where you get the escape velocity, if you will, out of a trade. The most of it, And so when I'm looking at a trade that looks like this, I'm looking for a quick drop initially, and then you usually get a little stabilization. There's a lot of other things I could apply to this trade. But like I said, it kind of goes against a lot of people's macro thesis when they're talking about the RBNZ, and they think that it should be priced the other way around. But
first of all, if I can I just interrupt you for a second?
Yeah.
So first of all, just kind of for people who are watching this to understand the basic dynamics. A wedge is what you're seeing on this chart, and please, walk me through this, Blake, is we're seeing a contraction in volatility as price is kind of rising. Like it's, you see that the range is getting tighter and tighter over here. And the tighter that range gets, that's indicative from a technical analysis point of view of possible exhaustion of the directional move. In addition to which, by the way, if you're looking at this on the chart, it's clearly a double topping. Like, it's certainly got resisted the 108 there, right?
You could say that for sure. There's actually a lot of other technical confluence that matches up. Whether you're a harmonics trader and you're like, oh yeah, well I see that butterfly setting up, and there's a lot of 161% extension that we're sitting at, 78% retracement. Longer term, a lot of confluence here. So one of the things as a technical trader, what I like to do is not only I'm not basing my decision on one thing, but it happens to be my favorite chart pattern where you reach escape velocity so quick when you come out of a wedge, whether it's a rising, or in this case, a rising, or in another case would be like a falling wedge. And so what I'm looking for is for a reversal of the Kiwi to really outperform. One of the benefits of trading currencies, and one of the things that I've learned over the last really 17, 18, 20 years of predominantly trading currencies, is that seeing currencies on a whole spectrum against many different currencies, you can say, well, I see the Kiwis actually strengthening not only against the New Zealand dollar, but also against the euro and against the sterling. And so you can when you find that confluence and everything's breaking at once, it just gives myself that extra bit of security or confidence that I want to be taking that position.
Right. So it's not just the chart pattern; it's the price action of the currency against all the other currencies that show its relative strength, and it's obviously the fundamental kicker behind the RBNZ's uber hawkish stance that makes you confident in this trade, right?
Well, or people believe that they're not going to live up to expectations, but the charts are starting to show us that the Kiwi is actually going to start outperforming. And so, the RSI is starting to break down. We've got a daily close on the trend line, but since we got to do what I want to do it by a book, I'm actually looking for and just reverting back to the mean towards the 200-day moving average makes a lot of sense to me. But what I'm going to be looking for is a 38% retracement, which is 106.15, 106.16, stops above 108, and I'm going to be looking to take a trade. It's a kind of a lower beta trade, so you're not going to see. I don't have to worry about the event risk of what happens in the Ukraine so much. I mean, you could argue that the Aussie will perform worse in a risk-off environment, which is going to actually favor the Aussie Kiwi short. But that's up for debate, really. So what I'm going to do is I'm going to take a short, and I'm going to short 3 lots of the Aussie New Zealand with a stop above 108.11. So I want to make sure that it doesn't wiggle above 108.
I'm going to disclaim you while you're doing this. I don't want anybody watching to copy Blake. He knows what he's doing. You should just simply learn as a strategy here. Okay, this is for learning purposes only. I don't want you guys copy trading this mindlessly, because he's actually got a good idea what he's doing. So just enjoy the idea. Go ahead.
Oh yeah, because I'm and by the way,
I just know they're all going to start pushing buttons. I just want to make sure that they're not pushing the buttons.
Yeah, this is just kind of an idea of what's forming, and there you go. So we're going to be short, 3 lots, and I don't know where my position is. Oh, I guess it's right here. Right. So 3 lots of the Aussie Kiwi, and remember, we're only looking for a few days. I think the trade's over in Tuesday, but theoretically, I'd be looking for this over the course of the next couple of weeks. Looking for it to make its way down towards the 38% retracement, and maybe even an overshoot towards the 200-day moving average. I love when we're so far away from the 200-day, which is I like to get a revert back to the mean. When you have a setup like this, I tend to take it. So. That's my setup.
It's funny. It's funny you talk about Aussie Kiwi as a low beta trade. There was a guy when I was at FXCM who used to sit on the desk with me, who literally did nothing but traded Aussie Kiwi during NFP. This is when NFPs were a big deal, right? Like this is how old we all were. And he would trade Aussie Kiwi as like the laggard after the NFPs, and he used to make tons of money because he was like the low beta trader on the desk. He used to crack me up. It was like nobody even like paid even a scintilla of attention to Aussie Kiwi during the NFPs, but he would always, he'd always just play catch up, and it would always work. It was really funny.
That's and what NFPs. It's the great thing about economic data is CPIs. No one cared about inflation data 2 years ago
for
right?
a decade, right? For a decade, we couldn't care less. And now it's as big an event as NFPs on the macro calendar. I've actually put on our macro calendar now. Every time we have CPI, it's a tradable event. It's really interesting. Speaking of which,
book trade.
Right. Excellent. So speaking of which, so now, first of all, Brent, thank you so much for explaining volume profile to me. For the first time in like 10 years, I understand exactly what it is. And it's actually a very cool thing. Now, the way you explained it, I actually now see a whole bunch of value to it. So thank you for that. But what I want is we have to go to now, because of constraints of time, to our third challenge, which is basically your long trade. What are you going to do for the rest of the week? Because we're going to hold these trades till New York Tuesday, Australia Wednesday, as a positional trade that you like, and then maybe you can talk a little bit about the markets, and then I just want to wrap up with your charity ideas. So let's start actually with Blake. What do you like as a long conditional trade? I mean, I know Aussie Kiwi was obviously a longer trade, but also what else is on your calendar?
I actually want to stay with the theme of Kiwi, and I'm gonna actually talk a little bit about what Brent does, because I noticed over the last several years of reading his analysis, try to do it every morning, but most days I end up reading what Brent has to say, which by the way is very respectable. AMFX, sorry. AMFX is like probably one of the most respectable.
Also on your local radio, yeah.
It's a little late in the day for us, as you guys can imagine. But I love reading Brent's work and always have. So kudos to you, Brent. But he calls them a slingshot trade. I love false breaks. I love it when markets chase in directionally, and then they get caught on the wrong side. And that, to me, is like one of my favorite trades. And I think you call them slingshot trades. Is that correct?
Yeah, slingshot reversal.
Yeah, and so I like to trade false breaks, and I think about them on a longer term basis. And I was trying to do this over, thinking the next few days. Now I'm gonna try to play optimist here and hope things are gonna improve over the course of the next several days, maybe over the next week, with U.S. and Russia and Ukraine, and maybe some de-escalation. And one of the things that I've noticed is the New Zealand and the Aussie have both acted very well in the risk-off environment, and it's something that's probably stunned a lot of traders. And I think that the Kiwi yen can reach back for this 200-day moving average and possibly the 38% retracement. I believe this false breakdown caught a lot of longs off guard. Got everybody stopped out. Then you have longs that have been chasing it higher, and I think people will position themselves higher for a risk on should we get some sort of recovery. I am a believer. Use Brent's terms, structurally equities. I think they're going lower in the long term, intermediate over the course of the next couple of weeks. I think we're actually more range bound between 4,300 and 4,700 in the S&P. Right. We're at near the lower end of the range. I think there's scope for a move back up to 4,500, 4,600, maybe even 4,700 if the market starts reaching for it. Which would carry the Kiwi yen higher. So now this is a little bit more high beta trade. So I'm going to take the Kiwi yen and I'm going to be long. And so I'm not going to be long one lot. I'm just going to get long, or 3 lots. I'm going to get long one. Now I want to put my stops are going to be below these lows at the 75. I just don't want to see below 76 really. So I could do 75, 79. So stop loss at 75. 79, and then take profit. It's going to be wrong. That was my TD.
Right, that's your stock platform.
Yeah, back up towards the 200-day moving average, possibly even a little bit higher, but I'll target 78 for now, because I'm just thinking over the next few days by Tuesday, So hopefully we reach toward 78. So that's going to be my trade. I'm a little heavy Kiwi, but this is for charity, right? So
yeah. And we'll talk about that in just a second. But let's turn attention to Brent and talk to me, Brent. I know exactly what you're going to do, and I sort of share your feeling. But why don't you share with the audience? Tell us what you want to do.
Sure. So I like oil lower over the next week. There's a bunch of things that are coming together. How much of a time constraint do we have? Like, are
No, it's
we
okay. You
fine?
can talk. This
Okay.
is we have all the time in the world. Everybody's
Very cool.
riveted, so they're all watching us.
So one setup that I really like is when you see a massive volume spike at an extreme in price. So if you can see my cursor, this is one here, the low
Yep.
in oil.
Yep.
This chart is
I
oil,
remember.
and then the blue things are the volume. So that's like a huge
Right.
volume spike at the low. And this isn't like as dramatic of a volume spike, but it's still like if it's a 3-month high in volume, and that was this little flick. You can barely see it. If I zoom in, you can see it
Yeah.
better. That little flicker over. So that was like a big rejection on some Russia headlines, and this was the initial Russia headlines. And so the reason I like those is that the market spends a lot of energy to pump out that much volume, and like a lot of people are buying and selling and doing what they need to do. There tends to be like panic involved or like shoulder taps and forced cuts and stuff on those massive volume spikes. So I like using them as price extremes. And then here, I gotta just pull
Can
something
I
different.
just stop you right there? With
Yep.
the fact that volume has faded, in other words, that massive volume spike hasn't been confirmed by more volume. Like in other words, the volume actually totally declined. Like we had the spike, and it really hasn't. Momentum has just come off sharply, meaning that there's no more additional buyers. There's no marginal buyers beyond that spike. Does that give you confidence?
Yeah, I think that's bearish because I think what that initial thing probably is there's people on certain desks that need to hedge Russia, and they
Right.
said, okay, this is serious, let's hedge, and that's what that volume is. And then there's been a lot of other headlines, some of which sounded almost equally scary as the first one, and yet we're not seeing the same reaction. So yeah, I would see that as bearish. And then there's some other stuff going on, like kind of under the hood. So this is just to give you an idea of what I'm going to talk about after, but this is U.S. 10-year rates and crude. So you can see they're basically been the same trade. It's like if you believe in inflation, oil's going up and
Sure.
rates are going up, and that's what's been happening.
Right.
And when people doubt
Right.
the reflation trade, they go down. I'll reference that in a sec. But then this is so you can trade crude contracts all the way out to like 2033. And so this is the price of all the crude futures contracts.
Right.
So the spot is trading at whatever 91 or something right now, but
Right.
the contracts 5-7 years out are trading at like $65. And that curve shape generally means that there's shortages and people people that need physical are buying a lot right now, and they have to pay. If you need oil,
Yeah.
like physical oil spot, you have to pay whatever the price is. You can't buy it 5 years from like the contract 5 years out. So if this chart here is the difference between the front contract and the contract 5 years out. And if you know what a chart of oil looks like through this time, when the front contract is $25 above the 5 year, like 5 years out, which it is right now, that's
Right.
what this chart is. It's just the difference between contract one and contract way out there.
Right.
And if you know what oil looked like at all these times, these were amazing times to sell oil. So like these 2013, mid 2014, and then 2018, these were all amazing times to sell oil. And essentially it's not random. Like the reason is that when the front month is super crazy bid like that, it tends to be a temporary thing. And then in terms of, I think that rates are whoops. Sorry, that's the wrong chart.
Okay, we see it.
This chart here on the left, that's 10-year rates. So the global financial crisis low was 204.
Right.
This low in 2017 was also 204. And then all these highs here, right? Like this is when the Fed started cutting. And
Right.
all these highs are like 205, 215 is the highest one. So basically 204, 215, I think is like a massive band of resistance for yields. And if you believe in, which I do, that mostly like all financial markets and products are all being driven by a lot of the same variables, right? Like global growth, inflation, monetary policy.
Right.
Those things are driving. That's why you see so much correlation between all the products. So if this is massive resistance in yields, then that probably has a read through to crude as well. So essentially what I feel like is that volume spike is an indicator similar to the dollar yen, where you had like good news, bad price.
Right.
And like you kind of suggested, the hedging's done. You know, people that were going to be forced to buy oil have bought it.
Right.
And then what also I like about this is you have all these tops right here, which is like that's $4 away. That's not really that far. So yeah, so that's my trade short with a stop above the high. So risking $4 to make. I
But
mean, in
yeah,
my mind,
but
it'd be smart.
let's not forget the most important reason for why, the most important indicator for why oil is going to be a short, and that's because it was on the cover of Barron's 3 weeks ago as a as a bull market in commodities. So it has the curse of
Yeah.
Barron's.
Yeah, I mean it's definitely a popular trade. Like the buy energy because it's cheap trade has been pretty popular. I don't think it's like this isn't a massive positioning story, but there is at least the position on lines could be a bonus. And then you also have like I always look at the risks, right? So like obviously Russia's the risk to the top side potentially,
Yeah.
although maybe
Yes.
not. Like maybe even if they attack now, I'm not sure it would make a new high, but then you also actually have a positive risk on this one, like a kicker that the Iran deal is kind of being tossed around, and that would
Yes.
bring
Yes.
another new supply.
Which
So like it's nice.
hasn't really been front and center because people are focusing on Russia, but it's definitely
Yeah,
percolating. Yeah.
and it's nice when you have a trade that has like just a positive risk kicker like that.
Right.
You know, that's always a bonus because that could get you like if you got lucky on that one. You know, that kind of I think if you're doing an expected value calculation, the Iran thing kind of offsets the Russia thing in my mind, in that you have a
Okay.
possible bullish shock for crude, but you also have a negative shock, which would help the short. So
Right.
yeah,
Plus,
I like
you
it.
could make a contrary argument that if Russia does attack Ukraine, he's going to need revenue. He's going to have to pump the he's like in order to get in order to be able to support, because war is a very expensive proposition, and he's
Yeah,
going to need to fund that. And the only way he can fund that is with hard assets. The only way he gets hard assets is through oil. So he actually increase the spigot more than less. It's sort of a contrarian view, but that might make sense too. So
yeah.
that
I
makes
mean,
a lot
I think
of sense.
Ukraine. Sorry, I think of Ukraine as a gas story more than an oil story too. I mean, I know they're correlated, but
Right.
I mean, and look what happened in 2014. Like they annexed Crimea and oil didn't go up; it went down.
So
Yeah.
Brent, I want to ask you on your trade because first of all I would love to be short crude and I'd like to press it. Where would you actually press that on the short side? Because I think it's like an elevator shaft from 90 and a quarter down to 86 pretty quick.
Yeah, I mean, all those, if you drew that channel, I like, I'm not a huge fan. I prefer horizontal lines because as a practitioner, like at a bank, you see how big orders will create horizontal lines on charts, right? Like if some, importer is on the bid.
Sorry. Let's look at the chart because I want to talk about it. That's such an important. I totally agree with you about horizontal lines. So if you could just maybe expound a little bit about that.
Sure,
Let's talk
sure.
about
So, like, let's look right here. So this could just be like a Japanese importer of oil has
it.
told their bank, okay, we need to buy like X number of barrels, and I don't want to pay worse than 89. So then, it won't hold 89 perfectly because sometimes they'll try to massage it a little bit, pull it back, put it in. But then that's the reason primarily to me that horizontal lines make sense is that there are large market stopping orders out there and they're visible. And a lot of the people that are doing those trades, like the terms of trade people, like an exporter buying dollar or selling dollar yen, they're not really like in the weeds on
Right.
like
Right.
caring that much about what 10-year rates are doing and stuff. They just want to sell their dollars and they're putting their order in the market. And then you see it bounce off, dollar yen bounce off 90, 15 times in a row because there's $2 billion worth of sellers there, So, and then when the guy's done, it goes whoosh and flies through. So that's why I feel like there's a connection between horizontal lines and the reality of the microstructure and what's going on.
Yeah.
Whereas like I feel like when you start drawing trend lines and stuff, it's not really arbitrary because you can do it mathematically, but it's not really, it's more of like a human construct that doesn't necessarily relate to actual order flow. So it's not as convincing for me. But anyways, so in this case, like to me, it looks like all those lows around 89 looks like some kind of order potentially. So I would put my ad below that. However, I'm not like a huge fan of that. I'll do it in like when in intraday and stuff if vol's high, but generally I just find it's not a good strategy for me. I end up like getting a worse average and getting annoyed.
Well, thanks for answering that. And you know, I spent a few years trading prop with some really awesome traders, and they really explain basically that they're looking at a lot of order flow around, especially big numbers. When you're talking about 90, it's a big number. A lot of people are going to be have their orders perched around those levels.
Yeah.
So.
There's a phenomenon in the market called round number bias. I've put out a few charts about it. I find it just absolutely fascinating.
Oh, I love it. I trade it all the time. And it trades crypto as well. And the thing is that the dealers know. So like they're all, trust me, they're all looking at 90 right now, and they just they know maybe there's still there's some market insensitive buyers there, but once they flood it, they're gonna press it because they know everybody else also has stops underneath there, so they can flush it for $2 very, very quickly and collect all that revenue for themselves. So there's a tremendous amount of exploitation that goes on around those levels if you understand how the game is played, which is really interesting. Yeah. Anyways, guys, you'll be very either impressed or I don't know, but the fact that this is the record trading battle. I've taken you guys way longer than we've gone because this has been, as somebody in the comments said, a master class in trading. It truly has been. I mean, if you need to record this, obviously it's going to be recorded, but you need to watch this over and over and over again. There are lessons here for a lifetime in terms of how people trade, and I hope all of you guys enjoy it. But before I let you go, thank you for all your trade ideas. Let's talk a little bit about what you guys do and what charity you guys are trading for, and just a little bit about yourself. So tell me.
You know what? Can you guys sell my 10 crude now that it should be open, right?
Is it yes? We're the market open. The producers are going to sell the crude for you. They're going to put you in the market. Right, and I'm sure it will stay quiet in Asia, and then it will flush into the North American Open, and
then it will absolutely collapse in the next 12 hours.
I'm there with you.
Dang it! I'm gonna lose this battle to crude trade. Damn.
Flash crash and crude.
You're like hiding out in Aussie Kiwi, which is like
come on, RBNZ, do something cool.
Exactly. Okay, talk to me, Blake. Talk to me a little bit about, first of all, charity you're trading for, and then just a little bit about your, what you guys are doing in the markets right now with Forex Analytics.
Well, I'm trading for the school for kids that don't smell well, that see very good. I'm just kidding. I was doing a Zoolander thing. UNICEF. Trading for UNICEF for the kids. But a little bit about me is I'm president, co-founder of and CEO, I guess, of Forex Analytics. We have a very, very large trading community. We do free webinars every day for anybody to attend.
Yeah. At what time of the day? Is it 9 o'clock in the mornings you guys do it?
Yeah, it's at 8 a.m. Eastern. So we end up covering a lot of the or excuse me, at 9 a.m. 9 a.m. Wait, let me think about like my time that I get up. It's at 9 a.m. Eastern because we cover all the news events as they come out, just as they're being released for North America. Most of the headline events, and then we have a large trading community with chat rooms, and we have technology and an app so people can have alerts on their phones and all sorts of things that we built for our traders, and that's what we do. So forexanalytics.com.
Yeah,
with an
super. Exactly. X. Super great website, and the everyday free webinar is just a marvel for anybody who's interested in trading. I highly recommend you listen to Blake. It's going to give you a really, really clean idea of where the markets are going that day, both from a fundamental and technical point of view.
And I should mention that, the second half of that hour, we do interview so many different people, like whether they're economists, we have portfolio managers, people that are, ex,
Occasionally, you interview internet hosts. Occasionally, you
You've
interview.
been on there before. Kathy's been on there before. We haven't had Brent yet, but we will at some point. So we try to bring on people from all sorts around the industry, so you can have more than just 10 minutes or 5 minutes. You see them on CNBC or Bloomberg. We spend a half an hour with them, kind of talking about things. So
super. Yeah, no, it's a super great piece of content. I highly recommend you guys all try it. How about you, Brent? What's going on with you?
So my charity is it's called Charity Water, charitywater.org, and basically the idea
is it the Matt Damon charity?
Pardon me?
Is it the Matt Damon charity? Is Matt Damon involved in that charity or no?
I don't know. I'm not sure. But what I like about it is just it has like a big impact because of the the extreme poverty that it's dealing with. Trying to bring clean water is like a basic, so that should be pretty much a human right at this point. I would have thought. So that's my charity, and what I'm doing is so I'm president of Spectra Markets, and what I'm trying to do is I've been writing this piece, my AMFX Global Macro note since 2004. But I always worked at a bank, so it always only went to institutional clients. And so I'm trying to kind of break free from that. And it gives me a little bit more freedom to write about what I want. I can be like a tiny bit controversial. Not that I'm not that controversial of a guy, to be honest, but I can just, have the freedom to write about whatever I want. And so I'm now doing that. So people
when does the piece come out in the morning? What time in the morning does it come out?
It depends, because like if it's like a research heavy thing involving a lot of Excel and stuff, it comes out later. It just really depends, between like 8 and 11 New York time. And I put all my generally like my strong conviction trade ideas in there, and then there's global macro. There's some bullshit, like some just funny facts and stuff like that as well, or things that I found interesting that I'm riffing on, whatever the themes are. And so I'm doing that, but then I have also the original Spectra FX Solutions has existed since 2007, and Spectra Markets is a new business that I'm running. But the original business is a business that provides FX and FX options liquidity to hedge funds. So I talk to hedge funds all day, and basically try to give them ideas and then get them to execute the ideas. So I'm doing that as well. And then I'm also doing like a couple of Substacks. I do a crypto thing that's kind of like at the intersection of trading tactics, macro, and crypto, because I feel like there's a lot of like maximal, like maxi stuff, and there's a lot of haters. And then there's a lot of like which L1 is going to win, which L2 is going to win and stuff. But there isn't a lot of people talking about like just the influence of macro on crypto and the influence of behavioral finance. And honestly, like behavioral and global macro explains like 75% of what's going on in crypto on most days. So that's the kind of stuff that I write about in my Substack. And then I have another Substack that's more like an educational thing, so that would appeal to newer traders. And you can just Google Brent Donnelly Substack or Brent Donnelly Spectra Markets, and you'll see everything.
And absolutely, everybody who's listening, follow Brent. I follow both, Pip Tsar, Brent, Blake Morrow, and Brent Donnelly. Brent's got a very unusual Twitter. He's got an upside down handle to his Twitter, which is very cool. So you can't.
So my thing has always tried to be, I don't always nail it, but my thing has always tried to be like a little bit less boring than normal finance, but still like finance.
Exactly. And I have to, Brent, I got to say this as a fan of yours and your work. I've been reading your stuff for a long time. You're so cerebral yet funny and witty, and it's entertaining read every day. So
thank you. Thanks, Blake.
And by the way, we just got a headline. U.S. Secretary of State Blinken will meet with Russia Foreign Minister Lavrov.
Yes.
Yeah. So a little headline
Okay,
happening.
so that may be positive your Kiwi yen trade. We'll see if risk goes on. Yeah. Anyways, guys, it's been awesome. It's also positive. Brent's short oil trade. All of those things are good. Anyways, it's been awesome. I want to thank everybody who's been watching. I know I went way over time, but I really thought this was if there was ever a trading battle that needed more time than we usually allocate, this one was it. I hope everybody enjoyed it. Do not forget to retweet the trading battle anywhere you go, because then if you do, you might have a chance to win the $500 account, courtesy of ACAP. And of course, follow Brent, follow Blake, and take care of all those resources and enjoy the show. And I'm going to see you guys in the market. And we're going to have Brent for the crypto battle as well, because he's already, like, the fact that he just said I started a crypto, he's going to have to be committed to the crypto battle as well. So we'll have him on again. And of course, we'll always have Blake on.
Yeah, you're forcing Ethereum down my throat, for crying out loud.
But you know what? That might be a good trade, because if it's a risk on, Ethereum is going to pop to 3, and it's going to help your portfolio. So we're gonna monitor all these trades. Everybody's going to find out next Wednesday how they do. But in the meantime, I wish everybody the best of luck, the best of trading. Boris Schlossberg over and out. Everybody have a great time in the markets. Goodbye for the trading battle.
Thank you, gentlemen.
Thanks, Boris. Thanks, Blake.